And again, I can't show you that because our historical data is not intraday. But we can get a gauge based on what we want to see. Now, what do we want to see? Let's take a look. I want to go to the chart and take a look at big charts. Let's look at some of our last hurrahs. Just had a recent discussion here, a coaching session I had at 3 o'clock. Something that I'm going to look into for everyone, and myself included. Now, I just recently posted a playlist, and we had a recent discussion last week on using the technical filters. Some things I like to look for in a breakout, looking for a MACD crossover and when the stock moves above the SMA 20. Normally, that's a good indication of a bullish move. This week was a fake out, however, because of other economic information that came out. The inflation report today, the tariff talk and everything, the return tariff talk from Canada and other countries as well. Uncertainty in the market increased the fear gauge. We saw the VIX up to 22. But this is a signal I typically look for. Now, a gentleman I was on the phone with, I have admitted this, that this is the signals that I look for usually for a buy. I was wrong in this case because of market conditions. And a lot of people say, well, isn't the buy point, even if SPY continued up here, isn't this here the better buy point at this bottom? Well, of course it is. So can we do a filter that shows a bottoming of the MACD, where it looks like it has bottomed, and now the difference between the MACD to the EMA 9 line is decreasing by negative value. It's going up to a less negative value, and I can get into these positions down here rather than up here. Well, it's something we're going to look into. It's something we're going to try to create as another filter. But, Raj, to your question, here's a good bottom here. I like this. Back on, we're looking at the 14th of January. We have a nice little MACD bottom here, and then it crosses above the SMA 20, and we have this little move. And 8 days later, it peters. Is that 8 days later? Yeah, it's the 24th. So we're going to go the 14th. We're going to run the search on January 14th. Maybe I'll even do the 13th in that case, because quite near the bottom, but not quite. We're going to stick with the 14th to be accurate in this case. We're going to use that bottom instead of what would have been my buy point right here on, the 16th, 2 days later. And we're going to run this. We're going to run that search we just created, but then we're going to look at where everything was on the next few days, the 22nd, 23rd, and 24th. Now, naturally, we're going to look at the other days too real quick. But what's going to happen here is we're going to try to see if we entered those positions on the 14th, we ran our search on the 14th, what results came up, what was the return on the 15th, 16th, 17th, 18th, 19th. I'm sorry, I missed a few days there because of the weekend, but 17th, and then 22nd, 23rd, and 24th. And it's not going to be that exhausting, trust me, but let's take a look. All right, we've got our saved search. We put on our SPY long call comparison. Let's go to backtest. And I'm going to click Smart History Excel. Remember, all of the positions we're going to find match that criteria, meaning that we had that delta of 0.68 to 0.71. And we have various expiration dates in between. We want to run this search on, I can't go back that far. All right, let me do this real quick because I want to find those dates that I just mentioned. So let me pause the screen real quick. All right, there we go. Now, so what were our criteria? And I'm going to do this criteria while we're talking about it. So we went into the search. We put all expirations 0 to 75. We had that restricted delta that we wanted to use of 0.68 to 0.71. Didn't have any other requirements other than putting in the stock list for just SPY. And of course, we did change the sort to earnings date. Expiration date. My apologies, ladies and gentlemen. That was our other one there that we had that sorted. My apologies, by the expiration date. So just give me 1 second on that. lowest to highest, of course. There we go. And we call that the SPY long haul comparison. Now, we saved that search, and we went into the backtesting tool. And this is where we're going to take over right now, all right? So, saved it, went to backtest, Smart History Excel. I wanted January, so now I have all of the years back in time. I want to go to January 2025. I want the 14th of 14th, that's where we started. And our save search, sorry about that, SPY long haul comparison. All right, so now the system's going into our database. It's finding all of the long hauls that matched our criteria on that given date, sorted by days remaining to expiration. 14th of January, 15th, 16th, 17th, jump to the 21st, 22nd. So there's multiple ones that came up here for each one. Deltas were in that range there. Volatility was a little bit lower. Now, once I have these results, we're looking at different strikes. The delta, as you can see, is in that range, Raj, 0.70, 0.69, 0.69, a little bit lower, 0.71, 0.70, a little low one here at 0.68. That's okay, because they're all comparable, and that's why we have some multiples in here. But now I can calculate group results. And this might get a little bit tricky because it's going to go to the first likely expiration date. Now, can't sort it by return, but at the end, here at expiration, what it's showing is we still have on these days, okay, so it went to each individual expiration date, 114, 115. So the 114th loss, that daily loss, but again, that was at the close. The 1 day out, 70 delta, 579 strike with a stock at 582, SPY, excuse me, at 582 was 131. The 578 deeper in the money, 2 days out was at 71. 3 days out, 577 deeper in the money is at 131. Still doing well here. But now the 7 day and the 8 day, they're at lower strikes. 574, 573, and so forth. They're showing about 160% return, 168%, 150% return. Here's one at 184. 574 strike 9 days out. Originally a price at 1242, but this is on expiration of each one. Now let's make a fair comparison. Custom end date. Let's go to the next day, the 15th. Highest return, the one on the 15th. 587 to get in was worth this 1362. Your 70 delta, roughly, 578 for the 2 day out expiration from January 14th on the 16th. 732 in, 1463. And then, of course, the returns diminish. Okay, why? Well, naturally, because, let's see, we were talking about here on the 14th. We got in here. We had the biggest jump here, and then it almost washed 2 days later. Right? So that biggest jump happened here, and then there was a wash. Now we have another big jump and another big jump and another big jump. Okay, so let's just keep moving forward. And what I mean by keep moving forward is let's go back to that default search. Let's go back to those results. And let's go to 1116. Now the 14th is gone. All right, that's a wash, but we saw those returns. The 15th still at 131. Oh, sorry, folks. The 16th at 71. All right, so these returns are getting slightly diminished now, but let's go to the 17th. That was the expiration date. Still 131 at the highest, was January 15th at its expiration at that time. We're losing time value for these farther out options. But what about on the 22nd, the 23rd, the 24th? We saw that increased move. We had the return that we saw for the 14th. We have this 131, but now look, some of these are moving higher. 150, 168, 160, 152. And again, why? Because we're continuing to move up. So these further ones out, we already locked in. We're beyond the return of the 15th because we're on the 22nd, the 17th, the 21st. The higher returns now are coming at the 22nd, 23rd, and 24th. But that's because it was still moving up. You've already seen the answer, and I'm not trying to belabor it. But what I'm showing you is that, let me just close that, based on what you're looking for as far as scalping goes, there's two general thoughts, Raj, here. Number one, something that we take advantage of every day, or, with our positions that represent about 50% of my portfolio, the married put approach, where we're buying a stock and buying a put far out in time with the expectation of longer term growth on the stock. What are the main caveats of an options in general? Number one, when you buy out in time, you're paying less per day, meaning that the option that's 6 months out in time at the same strike on the same stock is not 6 times the cost of the 1 month out option. It's like insurance. I buy further out in time, I get a semi-annual discount. I buy a year out in time, I get a yearly discount, or I pay. Buy, pay, you know what I mean. And that's kind of how options are set up. But at the same time, if I'm not paying 6 times, but I'm paying 3 or 4 times the current amount, well, naturally, I need a higher return. I need a higher movement up to see a 100, 200, or 300% gain on the 4 times priced I paid 6 months out in time, or maybe even not even double even, but I need a larger movement to see a larger percentage growth. When I'm selling time, I'm better selling closer in because I can get the higher annualized return. Buying time, I have a lower annualized cost buying options that are further out in time. Selling time, I get a higher annualized return, in theory, selling shorter term. That's the general rule. You can see that on any options chain at any time. But now we're talking about your specific strategy, which comes down to scalping. So again, the best, probably, based on your question, the best days to expiration by delta calls, you're looking for 5 minutes to 1 hour with an approach in between safety and price for the trade. I honestly think you're going to be targeting 2 to 3 days out in time from your entry point. Anything that beyond 3 weeks, as you mentioned, you just added, my observation is that anything after 3 weeks, the premium does not increase a lot. First 3 weeks are high premiums. Yes, now there's a balance of what you're facing right now in the market too, Raj. That goes back to the VIX. SPY call options are probably almost, with your 70 delta, my apologies. SPY call options with a 70 delta are probably, let's see here, let's just take the one that's, let's take an average number, 7 days out in time, closest to the 70 delta in our search. I don't have delta on this screen, do I? My apologies. But let's just, oh, they're both 549, 548. All right, we're looking here at 1072 and 1138. Okay, 1075 and 1142. I'm sorry, guys. 1075 and 1142. At midpoint price for around the 0.7 delta, 7 days out in time. Right now, this is the current search with the VIX at 21. Now, our results that we had our results that we had on our other search, and I didn't want to close that out because I knew I was going to reference it. Give me 1 second, folks. But on that default search that we used, where we accessed the fuller data, we could go back to January 14th for that long call screen. The 7 day out, 1 second, almost there, but that 7 day out from January 14th when the VIX was much lower, I mean, it was coming back for a buy point. It wasn't a decline, but we were showing some good value. We were showing some good strength. Sorry, folks. So the 7-day out, that's what I wanted to show. There we go. The 7-day out 0.7 delta was close, right? It was 11.58. That's around the same price. Volatility was still pretty high, but it's the 574, the 582. What am I looking at here? We're 8 points out of the money at that time. Sorry, folks. On our other view, there we go. What we're looking at right now, my apologies, we're still at 1142, 555 to 548. Yeah, so it's still about the same. It's about 6 points out of the money, in the money, my apologies. 6 points to 7 points. So it's about the same. It's not too far off, is it? So we didn't get too roasted on that as well with the implied volatility. But that's always something to consider in that case as well. But again, I want to transition to this, but the long option finder is a powerful tool that we also offer on PowerOptions, in addition to the search tool and more. And in the long option finder, we can take a look at, okay, so I want SPY, expected stock price. Let's say I think on Monday we might open up to 561. Okay, later next week, we're going to be at 565. A bullish outlook. I'm not any kind of projection or anything of that nature. We know it's going to be around $11 for your 70 delta. So let's go ahead and put in about double that. So put in 2,500. So what am I saying? I'm telling a system that sometime next week, let's say around the 3rd, I have an expectation SPY might be at 565 and I want to invest $2,500 into SPY calls. What is the call option that's going to give me the best bang for the buck in that situation? Now, this is not your scalping. This is more of a longer term 4-day. I laugh at myself when I say longer term based on how I trade, Raj, but it's a longer term expectation of 4 or 5 days from now, the stock having a movement up in price. And what this tool did is calculated which options would give me the best return, the highest percentage return if the stock hit my target price on my target date with this investment amount. And interestingly enough, we're seeing the 49 and 63-day out options. Now, naturally, we're not seeing Monday's option because I selected date of 4/3. It would have already expired on the 31st. We're not seeing Tuesday the 1st. We're not seeing Wednesday the 2nd. We're not seeing those. But let's go ahead and go back. And let's say the 2nd. We're going to give it the 1st. Let's give it the 1st. April Fool's Day, right? All right, so let's go ahead and go to that. Now, it's taking a long time because it's going through every expiration that's available. It's grabbing what is the current price of those options right now and what those options would be worth using the theoretical pricing models if SPY is at 565 on our trading date. My expectation is now we will see one of those 1 or 2 day out options available as the highest return. But still no. It's very interesting. I'd expect to see... I'm going to show 100 results. I don't know where the 1 day, I figured they'd be a higher return. We're seeing returns of 114% theoretical value going 33 days out. Deep. Oh, okay, that's why. These are deep out of the money. That's why. I can't isolate this one to your 70 delta. That's where my dilemma is. We're not seeing the highest returns on the shorter term because it's looking for that project. It's not looking at your 70 delta. Naturally, the highest returns are the options that are furthest out of the money, if that was my projection. It is ordering it by highest percentage to lowest. Let me turn off the view here so I can scroll down the bottom of our 100 trades. And still, I got some 20s in here, but I'm not seeing the 1 day out, 2 day out, or 3 day out options. 7 day out, 6 day out dailies on SPY. Not getting those. But again, it is a powerful tool to use, but it's not showing me what I want because it's not showing me those shorter term options, which I thought would appear with this type of move, especially the 3 day out, 5 day out options. Even though we're going just a few days out, the Thursday, the Friday series should appear here and be a very high return. But I can't isolate this one to the delta range. That's the problem. But as we saw in the search, and then using the historical searches under long calls, we're able to do that. We can isolate it directly to what we want to see with any kind of delta range, probability range for spreads, specific ranges that you want for stock technicals, stock fundamentals, and more. We can isolate that as well. But that's the power of the historical tools. It did give us a relatively good view of expectations